Hi guys, welcome back to another video by KLCI. This is our first video of the year, so happy 2024. So like most New Year's, there's always this tendency to, hope for the best and try to catch whatever prospects, potential upsides from whatever industry or from whatever tailwinds that is happening. And of course, there's always this kind of hopeful aura, especially during the start of the year. Of course, we will be making some of our predictions and based on some of the observations on some events that have happened. So stay tuned to the entire video, and hopefully these observations and these predictions can help you to better position yourself, in particularly what kind of industry should you take note of for 2024. So without further ado, let's jump straight into some of the key observations and events that have happened, particularly end of last year and early part of this year, and then what will happen potentially for the rest of 2024. I'll pass it to Chun-Bing. So what has happened, I would say, that excites you from a Malaysian or investor point of view?
Overall, I think I haven't made my New Year resolution personally, right? But I think overall, it's quite gloomy in a way. But if you are investor, actually, it's not a bad year. So, contra view, quite interesting. But again, it's a new year. We should always hope for the best. And of course, when we share some of the information today, you might cover some stock names or whatnot. Ultimately, this is just for sharing purposes. It didn't serve for any buy or sell decision. So if you wanted to zoom into some of the interesting thing that we managed to grab from multiple sources, this is an interesting one that if you wanted to talk about KLCI index, I think the key takeaway with this chart is basically has been flat for a lot of years. I think it's also consistent with some of our advocate that we are saying you should go beyond Malaysia if possible, even to, let's say, nearest to Singapore's when you want to invest into stock, for example. So key takeaway remain kind of flat for quite long. It's just not 1-2 year. It has been more than 5 years, right? I mean, not exciting, but these are some of the observation. If you continue on, this is the part that we always hear a lot of information that the money is flowing out from the country. It means that the investor don't have any, lack of confidence in our markets. So how do we tell typically when we talk about this kind of topic? Usually you have some chart to talk about the inflow and outflow of the fund. So the fund can come from foreign fund, meaning come from any institution beyond Malaysia, or it can be supported by local institutions. For example, hit your EPF doing investment locally or whatnot. So ultimately, this is the one that actually make the movement for the entire markets. And of course, me and you as a retail investor, we are also in there playing a small part, is the one in lighter blue. And of course, the one that you wanted to take a look is the one in darker blue. Those represent the fund from foreign country. You can see there is a massive outflow in March 2023, June, and also October, and then come back in July or November 2023. But all in all, it seems like there are a lot of outflow. Good sign, bad sign, we'll probably make some stand later in the video, but this is something for your investment. But one thing to note that back in 2023 October, there's a lot of outflow and local institutions actually pump a lot of money into it so that it balance off. So there are a lot of things behind the scene, but again, this some of the observation that I think is quite interesting, right? If we continue on, then we talk about, if you zoom into sector by sector, which is the one that actually perform in Malaysia compared to the previous year. I mean, during COVID time, there's always a lot of focuses into the technology industry. Semiconductor, that has been the key player that give a lot of hope. And of course, not forgetting the glove counter, but if you zoom into 2023 for 3 quarter and you compare it back with 2022, what does it mean? So with this chart, it's quite interesting that the key sector that actually outperform are giving a higher numbers is basically from REIT. If you go down further, properties and also construction. Somewhat interrelated property focus. So this is a key thing that happened if you compare year on year for 3 quarter perspective. And of course, technology is actually doing, showing a negative figure and so on. Right, Jupan, have anything to add on before we move for some other observation?
Yeah, I think one way to view this comparison year on year wise is especially for some of the sectors that we know are cyclical, say for example for energy and plantation, right? And also maybe a bit on technology as well, because the technology sector in Malaysia revolves around semiconductors, and it can be cyclical as well. So one way to view it is, yes, it has been down, so potentially things could turn out to be better for them in 2024. So with regards to energy and plantation, of course, if comparing back 2023's performance against 2022, where prices were high and we were facing with a very hyperinflated world back then. That was also the period of time where the Feds raised the rates and interest rates around the world went up high. So that's why now we are seeing, this cyclical sector, particularly from a commodity size sector, showing negative signs. So there's a shrinkage. And where else for technology? Well, just earlier, or I think just early last year, the US tech sector took off, but not entirely true for the semiconductor space. So yeah, that's why you see a negative side. But then again, if we are looking at things from a very cyclical point of view, things could improve for these negative showing sectors as of now. Yeah.
Yeah, but again, just now the one that I've actually called out for REIT, property and so on is from a revenue standpoint. But if you zoom into net profit is another view. So how to interpret it, I leave it to you guys. But it's quite interesting when you zoom into all these things. So it can be, for example, property sector, the revenue is showing a year-on-year growth of 14.9%. But on the other hand, net profit is actually showing negative 24.1%, for example. So multiple angles to look at it. And we continue on with some of the key events that we should take note starting 2024, more things that may be related, maybe not related to us directly. One of the key thing is the free visa entry for the Chinese and also the Indian nationals. We can expect some influx of tourists, probably is good for travel industry. And of course, construction doing quite well last year in a way. And I believe mega project will be some of the team to keep the economic activities active in a way. With the blessing from government, try to pull some bullets. So one of the key things that you should take a look or continue to put your focus on is something related to HSR, which is standing for high speed rail. Of course, the one that's showing inside this slide is about something, some connection between KL and Bangkok, but the key focus for this HSR is basically a project to have the real direct connection from KL go all the way to Singapore. There has been agreed and signed, and after that got called off. Malaysia paid for some penalty, and it resurfaced last year. So again, whoever that's participating in this mega project, probably there might be some movement in the share price as well. So feel free to check it out. We used to have some video talk specifically about HSR. We'll put a link inside the description for your reference. Then continue on. 2024, I would say there are a lot of stress if you talk about taxes. So service tax will be officially 8%. excluding the F&B, which is the one that impact the most people, but it will go on with quite a number of sectors. So 8% is a new one. And then high value goods tax, we have 5 to 10%. Capital gain tax on unlisted local company shares probably didn't impact me and you, the retail investor, but something to take notes, and e-invoicing, so on and so forth. And of course, one of the key information that we should continue to monitor is our OPR. So what stands for OPR is overnight rate, right, Japan's? Or how should we put this thing in
Yes,
layman?
the
What
overnight plus,
OPR
right?
represent? So if you
It's
guys
basically the interest rate that bank never charges, yeah, for banks lending money. So it will form a basic um, interest expense between banks, and that will also affect the loan interest for mortgages and also for car loans as well.
yeah, so why this is important to show is I think Malaysia try to keep the OPR percentage in a lower level. If compare Malaysia against different other country like Indonesia, Singapore, and so on, we are the lower one. And of course, it means you will have lesser burden if you are having some mortgages. But this is also indirectly have the impact on our currency, because if all your interest rates or whatnot remain low, and the interest rate in the other country is higher, then there will be a natural outflow of money to go for a fixed an asset that's giving a higher return. So, for example, your interest rate is let's say 3%. If you use this OPR to represent the interest rate in Malaysia, then you have a 5%, let's say OPR in US. And of course, people will go for US because it's higher. So all these things interrelated. If you wanted to actually have a much better currency, probably your OPR will go up as well. So this will be some of the topic that we will cover later to talk about our prediction. But yeah, I think this is the key thing we wanted to share from an observation standpoint. And of course, I think after going through so many things, I will start with my first so-called observation or prediction. After that, continue by Japan. If you ask me personally, I think OPR most likely will remain unchanged, and there's a possibility to go lower. Very low possibility because we are already at the lower end. Due to the fact that from a global standpoint, there are a lot of analysis talking about 2024 might have some rate cuts, right? So if you ask me, probably OPR, I would say most likely will remain unchanged. And of course, currency, we shouldn't expect ringgit to rebound drastically. It probably won't happen as well. So I would say kind of status quo, but it won't be worsened from a currency standpoint. This will be my first take. What about you, Japan?
Yeah, to continue from my observations, I think, yeah, back then when the Feds were raising interest rates by leaps and bounds, comparatively, Bank Negara Malaysia has not done so in similar manner. So we did increase the rates, but we were not as desperate as US and also other parts of the world. So yeah, we are talking about 2024 where rates have actually peaked based on plenty of feedback from the Feds and also from multiple sources. So the US interest rates will definitely come down phase by phase, but that does not mean that the Malaysia OPR rates should also follow in tandem, because back then we didn't actually raise in tandem as well. So that automatically leads to what will be the bank's performance, right? So with particular to the Malaysian banks, it depends on how you see it, right? So um, rate cuts would definitely hit the banks upfront during the short time frame, but it also signifies that the worst could be over and we might see an influx of new economic activities and potential, as you said just now, mega projects kicking in, and that would also be beneficial to the economy and also to the financial institutions like banks that are listed on Bursa Malaysia. So that is how I piece together puzzle number two with um, our first observation, which is the interest rates of an OPR direction of Malaysia. Yeah, and yeah, what about your next observation with regards to what we have observed and what has happened from the news that we have obtained?
The second one I would say is rather tricky because there's a lot of talk about reduction of the targeted subsidy, but that one is a bigger topic. But one key thing that get us towards that is Malaysia already have an initiative for you to update your data in so-called the PADU database, which I believe it will be the source for us to basically determine who will be eligible for the subsidy or whatnot. So this thing will happen naturally, but whether it will have a direct impact into the consumer goods is something to be observed. But I would say from a short-term perspective, it definitely will hit the consumer markets. The consumer good, all those things will definitely be impacted if targeted subsidy is lifted. And of course, depends on how they do it. My phases probably is lower impact. If not, I would say the uh, short-term pain will definitely come if targeted subsidy were to be executed within this year. This will be my second one.
Yeah.
How about you, Japan?
Um, I think that yeah, potentially, if subsidies are, I think there's a you can view it from both sides of the coin, right? So at the end of the day, we still need subsidies targeting categories of Malaysian that would require them. But I think due to the fact that for so many of years and generations where subsidies have been given out but not well executed, yeah, I think most of the people have been enjoying subsidies, even though from a financial point of view, they might not really require it. And that actually costs, you know, maybe a huge number of funds that were supposed to be used to, develop infrastructures, they were channeled to subsidies. So, yeah, it's going to be painful if that comes to play. By the end of the day, it's about thinking long term, where we need to encounter this pain from a short-term basis. Yeah, so only the categories, say for example, the P40 that deserves and requires these targeted subsidies are the categories receiving them. Whereas, yeah, M40 and above, yeah, we are on our own, and the funds, the country's revenue can be further redirected to other initiatives, and that could eventually help spur the country to a better shape, say 10 to 20 years down the road. Yeah.
Yeah, I mean, there are a lot more opinion that we can share, but again, we have also worked together to put some of our thinking, thoughts, and also some of
Yep.
the thesis they wanted to make for 2024 by actually having a curated reports for 10 Malaysia stocks into one. So this is our regular activities. We'll be running it for years, I think starting 2021. The response has been good. And then what we plan to do for this year is a special one because last time it's always a mix of Malaysia stock with the international stocks. For this year, we are going to have a special edition, which is the Malaysia edition, that 10 curated stocks balancing multiple factors with some species that we think it will be performing this year into one single report for you to understand and for you to take action. Do you want anything to add on our stock plus?
Yeah, so I think this is the first edition that we plan to include just 10 Malaysia stocks because, as we know, there are a lot of Malaysians who are still very comfortable with just the Malaysian market. And yeah, with 2024 being a year where things could look much better than 2023, yeah, we thought of actually launching a Malaysian edition for Stock Plus, containing 10 purely Malaysian listed stocks in Bursa Malaysia, covering multiple sectors as mentioned. And of course, these stocks are meant to be long-term value investing kind of candidates. And if you are new to the market, if you are unsure of how to kickstart, yeah, I would say that this edition would definitely be one of our editions that you want to take note of and get your hands on, because at the end of the day, it not only provides you 10 quality stocks for long-term investment, but also to help you frame your mind and understand the framework of how to do a proper portfolio construction from stocks with multiple sectors and complement each other, and hedging each other's risk. So it's a very concise and complete companies that complement each other, not just for 2024, but for longer time frame as well. So of course, we will put a link where you can access Stock Plus 2024 Malaysia edition. And of course, for our Premium Club members, if they're watching, this report will be available for you for free as always. Thank you for the support as always. We will always strive to provide much more value to all of you. And yeah, if there's anything, just head over to our Premium Club Facebook group and give us a shout for any questions and any topics that we want to discuss. So that's about it. Yeah, we'll put it down in the links. Do take note that we are having an early bird preview and price for it. So you might want to take advantage of that before we revert the price to the original price in a few months' time. So yeah, anything you want to add on, Chunming?
Yeah, this if you wanted to know what to expect for each stock that we're going to cover, it's just not for you to talk about the stock selection. It will cover the business, the core business about the stocks, the financial performance historically, and the thesis on why we think this is something can perform from a long-term perspective. But as as an investor, we shouldn't only look at the strength, we should also look at the risk. We should call out certain risks within each stock, and ultimately, what is the key value to be extracted, and why 10 stock from multiple sector is also being covered indeed. I think it's a report close to 100 pages. So this is something to expect. And of course, if you are having any question, please feel free to reach out to us in the comment section, reach out to us via Facebook messengers or whatnot. We'll definitely respond to your question. I think that's about it for today. We'll be covering more other videos about, let's say, what to expect from other country globally standpoint. So if you're interested, stay tuned to our channel, and we see you in the next video. Thank you. Bye bye.